Hey folks, what were these homeowners thinking? I'll talk about that and then get into the latest home prices and insights for the Peel and Durham region for week ending November 8th, 2023. I'm seeing so many examples out there that makes me just kind of scratch my head wondering, what were they thinking? One home was a townhouse. Purchase price 15 years ago was $250,000. That's it, $250,000. But today they're talking to me about they need to sell, they can't afford it. Their mortgage is between first and second is $800,000. It's absolutely insane. And I'm thinking, what happened? Value went up. You should be so excited. You're in a strong financial position because of your principal residence. But no, this family thought using the home like an ATM machine, basically is what they did. Another situation, they own two homes. They're principal residence that they've been in for many, many years. They took money out of that, a HELOC, to purchase a second investment. Now they're on the verge of losing both homes. And when we do the numbers, both of them, lucky if they both cover the mortgage. One is probably not going to cover the mortgage on that home. And now they've got two homes on the verge of being lost, when if they just would have stayed put and been content with the value of their home going up, building a bunch of equity, they'd be in a position where they'd be looking around at everybody else's financial problems and feeling confident that they're strong. They have $500,000 to $750,000 in equity in their own home. But no, they didn't do that. They decided to buy a second home. Let's rent it out. After all, real estate always goes up. Well, it's true. It always goes up until it doesn't. And some people get caught in that shuffle of when prices change. There are many, many examples of properties being underwater right now. For those of you that don't know, underwater means the value of the home is less than what you owe on the home. So you can't pull out any more money. If you sold your home, you'd be short. You'd still have to figure out a way to give the bank the extra money for the mortgage that's owed on the property. I'm not trying to give anybody financial advice here. Lord knows I've made many mistakes myself in the past. We all wish there's many things we could redo, especially when it comes to financial decisions we've made. But folks, logic, nothing lasts forever. Real estate, you really got to look at it sometimes, especially if you're buying a second and a third home. You really got to look at it like an investment, like a gamble, because that's what you're actually doing. The home that you bought to live in, to stay in, to raise your family, where every month you pay mortgage, that's one thing. And you know, value goes up over time. And you did pretty good, but you weren't thinking of it being an investment. You were just thinking, I need a place to live. I'd rather pay mortgage than pay rent. You found a place, you stayed there for years. But then what happened? Value goes up. You feel and I don't mean no disrespect to anybody, but they feel like better than maybe, stronger financially than maybe they should consider. And they take money out. Some of them took money out, didn't even buy other properties. They bought cars, vacations. They did all sorts of other things that has zero asset value later on. That makes it even worse. Live within your means. Be careful about pulling money out of your home. It's your money. It's not free money. Consider yourself fortunate that your home is worth so much more today than what you paid 5 years ago, 10 years ago, some of you 20 and 30 years ago. It's phenomenal. And for many people, that's your retirement. That's your nest egg. Don't mess that around by trying to, reach for more than maybe, or bite off more than you can chew. Not everything stays the same, especially when we're talking about finance. When it's good, it's great. But if you make the wrong moves when it's great, you're going to feel the wrath of it turning the other way in no time at all. And that's the situation we have today. Many homeowners are stuck because of what they did when they were in a good position. And now they find themselves in a bad position. And these are not bad people. They're homeowners. They're family people. They've got kids in school. And now they're stuck. So before you think about pulling money out of the equity, consider it, that could be lost. Do I really want to do this? If you feel this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. And if you want to speak with me about your real estate situation, it's really simple. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you. We'll talk about whatever's on your mind, selling, buying, whatever's on your mind. Now, let's get into the numbers. It's scary to see how many homes are currently underwater. The real scary part is many homeowners don't even know it, and mostly because they have a false sense of value of how much their home would actually sell for today. They think it's way higher than the current reality. Let's get into the numbers. Here's a quick summary. Durham, Brampton, Mississauga, average sold prices for detached properties only for 3 months. Just a couple of quick notes here, what I've circled. Sometimes the gap between the three, usually Durham and Brampton are pretty close together when it comes to average sold price, and Mississauga is way up top, but every now and then the gap gets a little bit closer together. Here we have Mississauga, again, for detached properties only, this time broken up for a year by week. I've got a lot of notes on here I'll get into in a second, but let's just look at the current numbers. For week ending November 8th, 27 detached properties were sold, which is down from the previous few weeks. 2 of those properties were sold at $2 million or more. Average sold price has come way down to $1,320,000, and that's lower than the lowest month we had, which was October last year, of 1.391. So 1,320, really low. When we look at the chart here, there's just over a year ago or so, or at the beginning of this year, where prices were just around the 1,320. But 1,320, extremely low for Mississauga. We haven't seen prices that low in a while, or average sold price that low in a while. So let's look at, excuse me, all the markings that I have here. So this red line is basically January this year moving forward. The box here is really the spring market. This line here is pre-Labor Day and post-Labor Day. So right over here would be the summer. And a lot about real estate when it comes to prices and volumes, a lot of it is seasonal. For sure, the exterior factors or the other factors like interest rate, supply, demand, all those have a huge or play a huge part in pricing and volume. But seasonality is something that is there every single year, and we see the pattern. So let me show you the pattern. Outside of, here's the holiday season, Christmas here. As soon as we get past that, middle of January to end of January, we see sales pick up into the spring months and to the beginning of summer. We see sales pick up. We see average prices pick up. Happens every single year. Sales, prices. Our most amount of sales are typically when prices are the highest. Then at some point, now it's hard to say exactly when, could be the end of spring, could be the end of May, could be the beginning of June. Sometime in there, we see sales come down. Sales tend to drop leading into the summer and just before Labor Day. And we see average prices tend to come down also. Happens every single year. Right up to Labor Day. Then right after Labor Day, we call like that whole fall market, we call it our second spring. We see sales go up, average prices go up, and then come down, We're not sure when, middle of October, could be the end of October, could be middle of November, but at some point after Labor Day, when things pick up, they go down again all the way to Christmas and into the winter months, into the middle of January. And so I put a few dots here leading up into January. If seasonality repeats itself, and it often does, it's downhill from here. We should see sales tapering down all the way to Christmas. Average prices typically will come down. And we saw it here. They're coming down right away, all the way down to the Christmas season, to the holiday break. Sales drop, average prices drop, and then they pick up again. That's seasonality. I know there's a lot of markings here, but we see it every single year, just about. Compared to last year, 1,320,000 is 2% lower than last year's average sold price. The median price of 1,256 is 3% lower than last year's median price. 27 were sold, only 15% sold at list price or more. So that's not many. Look at sales. Year to date, so if we compare January 1st to November 8th, this year, 2023, to the same period last year, 2022, we're 11%. We have 11% fewer sales this year. Doesn't sound like, oh, it's only, 10, 11% difference. Not a lot. If you look at it like that, you're right. It's not a lot versus last year. But if we go back another year, compared to 2021, this year's sales, we have 45% fewer sales this year versus 2021. 45%, that's close to half as many sales this year as 2021. That's a huge, monumental drop in volume. Listings coming down. There are fewer and fewer listings. We should see this pattern. Again, if seasonality is a thing, we should see fewer and fewer listings headed into the holiday season. Active listings, they were going up. Now they're starting to come down. They're coming down. I don't want you to think, oh, is the market getting tighter? But there's fewer sales also. So there's quite a few listings out there still. And as a result, months of inventory climbed up from the previous week, sitting at 4.8. Months of inventory, in most cases, will continue to climb headed into the Christmas season. Here's Brampton. 40 detached properties were sold. 3, which is huge right now for Brampton, 3 sold at $2 million or more. 40, it's actually a pretty good week. If we've got the Labor Day line here, post-Labor Day, 40 is a good week as far as detached properties go. You see the pattern leading up to sometime the end of May. Sales are coming up, then they're coming down. Average prices coming down going into the summer months. Then again, up and down. Volume didn't change that much. So, we expect to see volume tapering down. I'm sure we'll see that soon. But average sold price of $1,152,000. It's a big jump from where we were last week or the last few weeks. It's still much lower than the lowest low we had. Well, not much lower, but it's lower than the lowest low we had, which was October last year. Compared to last year, 1152 is 9% lower. The median price is 10% lower. And you can see the dotted line, which is the 4-week moving average prices and median prices coming down. Compared to last year, we have 18% fewer sales of detached properties in Brampton. Compared to 2021, we have 56% fewer sales. So more than half the fewer sales, 56%. That's huge. We thought 45% was a lot, 56%. Way worse situation in Brampton as far as volume goes. Listings coming down. And months of inventory sitting at 4.2, very much a balanced market when it comes to Brampton detached properties. Here's Pickering, Ajax, and Whitby, which is my Durham sample. 34 detached properties were sold. $1,084,000 is the average sold price. Overall, average price has been coming down. $1,084,000 is 2% higher than where we were this time last year. The median price is 5% lower than where we were this time last year. And you can see with the dotted line, prices, both average and median, have been trending down. Year over year, we have 14% fewer sales. Compared to 2021, we have 42% fewer sales of detached properties in the Durham region that we're looking at. Listings coming way down. Months of inventory starting to creep up, now sitting at 2.9 months of inventory. We've not had more than 3 months of inventory in the Durham region, but it's starting to get up there. We're now like knocking right at the door. We're sitting at 2.9 months of inventory is on the rise in the Durham region. Here's condos. Now this is for all of Peel region. 28 condos were sold. One of those was at $1 million or more. Average sold price compared to the previous week plummeted. It's now sitting at $605,000. Excuse me. $605,000, just shy of where we were this time last year. So rounded, 0% change. In reality, it's lower by 0.3%. The median is lower by 2.3% compared to the same week a year ago. 28 were sold, less than a third, 29% sold at list price or more. Compared to last year, 17% fewer sales. Compared to 2 years ago, 47% fewer sales, almost half. Lots of volume, not on the table this year that was there 2 years ago. Listings starting to come down, still quite high though, and months of inventory has come down, but still really high, very much a buyer's market, sitting at 5.7 months of inventory for condos across Peel region. Here's a quick summary. Now, Mississauga, Brampton, Ajax, for the most part, we're in a balanced market, but in some neighborhoods, it will feel, especially in Mississauga and Brampton, it's going to feel like a buyer's market. I mean, these are averages for the whole city. Different neighborhoods, you're going to have a different buying or selling experience. Condos, pretty much a buyer's market, just about wherever you go. Thanks for watching. Who you hire matters. Have a great day.